Go beyond market headlines to understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Doesn't seem like the handover is good. So Asian markets also seem like they've opened up in the red as well.
The bank has directed necessary steps to be taken under applicable law, including reporting to regulatory authorities and investigative agencies.
The S&P down about 1.6%, the Nasdaq down about 1.5%, and the Russell 2000 down 3%. So that's the overnight cuts across Wall Street that we saw. It's a 1/3% lower start on the Nifty, 24,714. Nifty Bank is down about 0.4.
Markets have come out with flying colors. The fact that you are at such elevated levels of 25,000 itself, I think, is a big win.
With the growth of the economy and the growth of the GDP, we have set a long-term objective by doubling in size between 2023 and 2030.
What SEBI had said in the consultation paper is that there would only be 2 expiries. One would be on Tuesday and one would be on Thursday.
All I can say is that if all the outstanding issues will be resolved and we will move forward.
India has a legitimate claim, and of course with its skilled workforce and low labor cost, we should be able to make a good dent in the manufactured exports also.
The Nifty Midcap index is down nearly 0.6%.
Well, that is the day so far, and the markets has been under pressure from the word go. No real reprieve. Last hour coming up. This is Closing Bell. We are coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant Rima and Nigel with me. Guys, hi, afternoon.
Hi, afternoon, and it's gotten worse, right? Yeah. We're at the day's low. Sensex has crashed nearly 1,000 points, and it's a global risk-off today.
Well, that's right, and I think the institutional numbers today become very, very important because I don't know whether it's the weak hands that are selling, they don't want to take a risk, because otherwise risk-off seems to be playing out. We have the 10-year that spikes up to 4.6%. The Indian rupee actually is making that big move. So, if you look at
86.1.
Yeah, if you look at it in the last half hour, you pull up a chart of the Indian rupee, it'll tell you the kind of weakness that we're seeing. So I think today's FI number becomes very, very important to track. I don't know whether they have turned sellers or not, but the intraday chart actually will give you a better picture of that one. Just take a look at that. Currently, and it's also at the lowest point of the day.
At the lowest point. It's also the Nifty weekly contract expiry today. So last hour will be important.
So, I mean, actually, that I don't think any other currency is moving. I saw before coming in, I don't think there's any move in the dollar. There was a big move in US yields last night, but across Asia, if anything, there's a little bit of cool off, 1, 2, 3 basis points as far as treasury futures are concerned. So this move in that sense is interesting. Otherwise, it is, the view out there is still, it's going to be short-lived and maybe 24,200 on the downside, but below it, tough to see the market trade down below it. I mean, 24,200 is about 1% away from here. That's it. So we'll see how this one goes. What Rima said, I think the expiry factor, and sometimes on Thursday, the market gets yanked up, sometimes it gets yanked down. So we'll have to see whether from tomorrow it'll look a little better overall or not. But in any case, I mean, the levels will come up on your screen. The last I checked, and I think that is now, of course, been broken, but we were trading exactly at the 20-day moving average, which is 24,513. And now we are slightly under it. The other one was 24,494. And now the market is trading just under 24,494 as well. That was the swing low. So we'll see what the close is in the next hour or so. Nifty Bank is below the swing low of 54,960. Again, I think the closing will be important here. And of course, the big talking point globally is bond markets. And not just in the US, but in Japan, etc. as well. I mean, for example, look at the very long end of the Japanese yield curve. There has been a bit of a move there as well. So that's the global story, and who knows how that will play out, that will pan out. But generally, the view in the market for now is 24,200 on the downside, and then maybe the market starts to look a little better. That's not very far from where we are right now. Prima.
Okay, let's just quickly take stock of the action on individual stocks. The Nifty is below the 2,500 mark. It's staring at a cut of more than 300 points, 1.3% gone on the benchmark indices. Sensex fall is in excess of 1,000 points. The top loser on the Nifty right now is ONGC. Post-earnings stock down 3.5%, and it's breached the 100-day moving average on the way down. Outside of that, but lots of commodities weak. So it's not just ONGC, it's Hindalco, Coal India under pressure, BPCL down more than 2%. M&M has lost ground. M&M is down nearly about 3%. IT names have been weak. Reliance down 2%. ITC before its earnings also weak in trade. On the way up, only 3 stocks, at least in the frontline pack. TVS Motors, IndusInd Bank and Bharti Airtel. 3 of them have modest gains.
Okay, all right. Well, let's get in then a call on the markets. Nagraj Sethi of HDFC Securities joins us on the show. Hi, Nagraj. Well, it seems that in today's trading session, at least, that 24,500 getting taken out is showing some signs of weakness. What do you think? Are we starting a fresh leg down? Or do you think this dip is going to be shallow as we have seen in the past? And you would use this as a buying opportunity?
Yes, rightly said, Nigel. Good afternoon. Nifty has been showing some sharp profit booking from the higher levels. I'm not expecting any bigger turnaround on the downside from here onwards, just a healthy downward correction and profit booking from the higher levels. And if the Nifty sustains slips below the 24,450 odd levels, then I'm expecting 24,200 to 24,000 is going to act as a strong support base for the market, where the 12th May downside gap is offering support, and I'm expecting the upside bounces to take place from the lower onwards. The most of the damage has already been done for the market from 25,100 to almost 24,450, 500 levels. I think some more weakness is likely, and I'm expecting upside bounces from the lower levels.
Okay, all right. What about individual stocks, Nagraj? What do you have on your radar?
Yeah, I have 2 stocks from the long side itself. First one is from a defense side. Majgaon Dock chartically has been in a fantastic up run. Higher tops and bottoms on the chart indicates that this stock has been in a strong upside momentum over the last few months. And currently, after a small downward correction, bounce back again from the last session, currently trading around 3473, 3475 levels. I'm expecting more upside in this stock. One can look to buy at this point of time. 3,700 is going to be the upside target, and 3,380 one can place a stop loss. Second one is Airtel Limited. Airtel was moving in a downtrend over the last few months, currently shifted into an accumulation pattern at the lower levels and gradually gaining momentum from the higher levels. Currently around the 1437, the overall chart pattern is indicating a rounding bottom kind of a pattern. One can look to buy at this point of time around the 1438, 1440 levels, and the upside target would be around 1550, and one can place a stop loss at 1380 levels.
Okay, those were some technical trading ideas, but the big story that CNBC-TV18 has learned from sources is that SEBI may soon release its circular on weekly index expiry dates. It's been watched very, very carefully. Everyone's awaiting that. Yash joins in with what he's learned from his sources. Yash.
That's correct, Rima. So it's important as far as both stock exchanges are concerned, BSE and NSE. What we've been given to understand is that market regulator, SEBI, may very soon look to release the final regulations when it comes to deciding on the 2 expiry days, the weekly expiry days for both exchanges, and of course the ancillary regulations around the headline regulation of deciding the 2 days. What we've been given to understand from our sources is that this final set of regulations could come as soon as tomorrow, that is Friday, or next week. And as far as the exchanges are concerned, what we've been given to understand is that the largest stock exchange, NSE, has already submitted an application, a request with market regulator SEBI that they would want Tuesday as an expiry day for themselves, that is NSE. In a situation where Tuesday is allotted to the National Stock Exchange, then BSE would be left with Thursday as its expiry day, because these are the 2 days which SEBI had in its consultation paper mentioned would remain as the 2 days for expiry of the 2 exchanges. Also, what we've been given to understand is that market regulator SEBI is actively considering NSE's request to be allotted Tuesday as its expiry day. But of course, a final call will own sources. What they tell us in terms of movement of volumes is that if Tuesday is allotted to NSE, as much as 20% of options volumes could migrate out of BSE. Majority of it could come to NSE. Also, it could lead to an increase of a market share of as much as 5% as far as options contracts are concerned for the National Stock Exchange.
Yash, thank you very much. That's, of course, the story. I just want to make it very clear that, of course, BSE is already on Tuesday. NSE wants Tuesday. And at the end of the day, the regulator will decide. And we're just saying that they will consider, NSE's proposal here. So we'll just see what happens. By the way, of course, the BSE has a 25% share now as far as the options volume go. Stocks, of course, reflected it. It's the number one performing stock on the NSE 500 if you look at the last 1 year. That is the BSE stock. So it's obviously going to be consequential for stock price from here in terms of what really happens. Here's a quick reaction from the SEBI chairman, Tuhin Kanta Pandey, and he was speaking earlier this morning. Listen in.
We will just be, right now, whatever is a framework, it's there, and we will be issuing post the consultation paper, the comments we have analyzed, that committees have met, and soon we will be issuing further clarification on that.
So that will take a month, 2 months?
No, I think within this month.
So will it be a
they'll shift to Tuesday.
No, those days are fixed now, those 2 days.
Question from you is that there is a lot of talk today about the expiry day circular from SEBI. What is NSE's take on it? Is there a day that you have decided?
No, we have not been aware we are getting it from you, but whatever the decisions of SEBI, we will have to go by.
Okay, that's the big story. Deven Choksi, Managing Director, DR Choksi FinServ, is now with us on the show. Deven, weigh in with your comments. Do you think it's likely BSE already has, dibs on Tuesday? They will change and NSE will get, Tuesday. How does this all play out? From an investor point of view, also, it's been a bit of a merry-go-round.
Yeah, good afternoon. I don't know whether we should be talking this subject from the investor's point of view. Frankly speaking, I think by changing the narratives or changing the dates of expiry, etc., that doesn't solve any kind of problem. On the contrary, I think we must understand one thing, that today one and the other exchange, is basically thriving on arbitrages. I think the volume which is getting created between the two expiry is more, created by the arbitrageurs who are basically using their positions to switch over from one to another exchange and for the economics. I think that we are not denying that part of it. But frankly, I think that is only creating more amount of volatility, and frankly, it is creating more amount of confusion to investors. So if for investors, we are talking about the derivative market and at the same time for the purpose, which is for creating the liquidity as well as for hedging mechanism, then in such case, I think it's time now that we start talking about creating the product differentiation in a systematic way, so that neither exchange keeps on toggling between one another and probably play around with this particular subject. So maybe we look forward to what regulators take a call on this subject. But certainly for investors, this market is becoming more confusing and more volatile because of this kind of movement which is happening in the derivative markets.
Okay, all right. Talking about expiry, actually, just take a look at what's happened. It's the Nifty weekly expiry day, and pull up the intraday chart of the Nifty. We hit a low of around 24,462. And in a matter of 10 minutes, we are 100 points higher. Just pull up, just take a look at that. Big spike is what we're seeing. This could be on account of, the weekly expiry that's playing out. And a couple of heavyweights actually would be pulling up the Nifty. I think you pull up HDFC Bank, that was down 1%. I think that's cut its losses to half. So they're seeing a big uptake on that particular name. Yeah, just take a look. HDFC Bank, normally that's the batsman that comes out to bat for the Bulls. What else? I think Axis Bank is another one. That was down 1.5%. That's down 1%. So I think the Nifty Bank on the whole has seen a bit of recovery. Could be expiry related because it's a quick fire 100 points. Now hanging on to this pullback is going to be important. That said, IndusInd Bank, that's a surprise of the day. The numbers were weak, but the stock is holding more or less flat. It's seeing a bit of a bounce from the lows of the day. Abhishek joins us to tell us what What are brokerages making of the numbers? Abhishek?
Well, as you mentioned, the numbers or the earnings in the banking sector, perhaps the worst quarter was by IndusInd Bank in terms of the losses and across various parameters as well. The corporate book that declined massively by more than 15% quarter on quarter, which is the highest that you are seeing amongst many other banks or peer set as well. The NII decline was 43% YOY and 42% quarter on quarter, the highest decline that you are seeing for the banking sector as well. Net interest margin for them was the lowest ever, coming in at 2.25%. Other income was also down massively by more than 71% YOY and about 70% sequentially. The only bank to report operational loss was IndusInd Bank in Q4 FY25, and they have given the highest net loss in Q4 FY25 by any lender. Slippages were elevated at 5,014 crore versus 2,200 crore. Annualized slippage ratio, the highest in last 16 quarters. Asset quality, one of the worst in 10 years or even more. The bank has used its entire contingent provision as well. The numbers way below our poll, both on the NII as well as on the poll of loss front. Brokerages say that they have cut earning estimate anywhere between 35 to 40% over the next 2 years. Some of them have cut as high as 45% by Motilal Oswal over the next 2 years. Loan growth to be in single digit in FY26 and it can touch 10% in FY27. Difficult for the bank to touch the mark of 1% ROA given the fact that the path is long drawn and ROE will remain between the range of 6 to 8% over the next 2 fiscals. The next event to monitor in this bank would be the CEO transition, whose names are submitted by the bank at the end of June 2025. Largely, brokerages have a reduced rating. IFL Capital as well as HSBC have downgraded to reduce. Target price ranges from as low as 600 to as high as 1,210. That is by Macquarie. Back to you.
Okay, all right. Thanks a lot for that, Abhishek. Deven, what do you make of this one? IndusInd Bank, there could be value, but there are too many loose ends, one would think. Would you buy into valuations, or do you say, no, it's very, very unclear, too many grey areas, you rather sit away?
So, Nigel, I think a couple of points. I agree that I think the valuation-wise price-to-book value ratio probably is at the lowest level. And that is also getting reflected because of the confidence of the players in the market into the stock. One after another unfolding of situation which is happening in this particular case is definitely, I think, posing some of the very serious questions about the ability of the management to run this particular business. And that's where I think the serious investors wouldn't like to take immediate bet. Till the time, I think we see a couple of things. I think the full disclosures, which I believe that I think the results have come out. But still, if any more surprises are left, I think one would like to know them. Second, the corrective course of action in form of A, the internal management and the control, and B, who the new leadership would be in this kind of a situation for the bank. Till this point of time, I think everything gets clear. I doubt whether I think on the ground, the business would be as usual for this bank. And that's where probably I think one is not very sure about whether one should go into the investment. Maybe I think the market will react because of its own reasons, technical reasons included. But I don't know whether fundamentally I think one would get enough conviction to buy into the stock till that under clarity for this.
Quite a few losers today. So one of them is Gokuldas Exports, where the management says that they will have to share some of the tariff hit with the retailers. All the US retailers they're in conversation with, they're asking them to share part of the burden. As of now, it's too soon to say, but it's quite likely that margins will be muted, and even ordering has been a bit volatile because you don't know what the extent of tariffs will be. So that's Gokuldas Exports. Stock is down nearly about 6.5%. Colgate, Mangalam has been telling us from the start that it's been a very, very weak set of numbers. Expectations were muted, but it's a miss on that. Mankind too is down close to about 3.5%. Deven, any of these buying opportunities to your mind?
Not really. I think too many, weak points out there in the respective businesses. Colgate, of course, I think I'm not completely surprised. I think it's more of a steady performer. And I think in a given quarter, if the performance is down, I think it has the ability to, bring it back in subsequent quarters. But yes, one thing is for sure that I think the competitive pressures are increasing from respective of the brands. And one of the reasons for which I think this kind of companies are probably now started facing the challenge, also due to the fact that I think the valuation-wise, they have always been quoted historically at the highest level. So there is no further headroom left. And that's where probably I think you're seeing the pressure after the result on the stock. But immediately, if any recovery is in sight, I'm not very clear about that aspect because the valuations are at the higher levels.
Okay, any view, Deven, on Stovecraft? We had the management that joined us earlier today, and they told us the same thing they told us last year, that they'll grow in double digits, which didn't happen. Now, they're saying they're going to grow in double digits and margins will improve. It's always been that company that has valuation comfort and it has capacity. But where are the numbers? The street wants to look at it. At around 570 rupees, what's your view?
No particular view on the company since we don't have coverage, but I think on the face of it, maybe I think one want to test whether the validation is happening on the commitment that the management has been giving. And I would prefer to wait for a couple of quarters before which taking any particular view on the stock. At this point of time, since we don't have coverage, we don't put across our views officially at this point of time.
All right, Devin, we'll leave it there. Thank you very much for joining us. Appreciate you taking out the time and being here as always. Guys, there was I don't have it now, but I'll just paraphrase a funny Twitter user just the BSE discussion which was happening, right? Posted saying that I don't know if this is a real quote attributed to Aswath Damodaran, the NYU finance professor, but obviously this person has attributed the quote to him saying, the first rule of being a successful F&O trader in India is to remember which day the weekly expiry is. I think that sums up the state of affairs, which of course now the regulator is trying to correct with Tuesdays and Thursdays, and we'll see.
But that I mean, sorry to come in, but I think that got very confusing when I used to cover F&O in the morning. Yeah. Today there is a weekly expiry for Nifty Bank, for Nifty.
BSE Bank X.
Because every day there was something, right? So, so I don't know. Let's see which way this goes. But
so now Tuesdays and Thursdays, just remember which
which
one. It'll be much simpler. We'll take a quick commercial break here. Sanjay Parekh, founder and CIO of Soham Asset Managers, on the other side. Okay, welcome back. 250 points lower, 24,560 is where we are at. Sanjay Parekh is founder and CIO of Soham Asset Managers. He's with us to take some questions. Sanjay, great to have you with us here. Thank you for your time. You know, some of the, we always kind of, once in a while, once every 2 or 3 interactions, get a stock idea from you, something new you've done. So why don't we, I mean, is there one today, Sanjay?
So essentially a recent addition, we used to own Sirma at one point of time. And then it moved up quite fast. And then we did sell off. But recently again, we found it quite attractive at reasonable valuation. And so last month, we added that because we clearly realized that the EMS space, certainly will do well. And this had a good amount of consolidation and earnings had moved up. And their valuation was now getting a little reasonable. It's still not that cheap. But for the growth, we were comfortable to enter. That was one entry that we did. Of course, it's a very small weight because these stocks are volatile. So we do keep an eye to average if it goes down. Another one we added was Polycab earlier last month. Again, that space has done well. All of them in that segment has done well. The opportunity is pretty large. And it's a sizable player with a pretty good market share. And, there is a clear story of unorganized to organized. And there were some worries about new competition, but I think that's still 3-4 years away. By then, this company would really gain size. And while again, it was not that cheap, but for the growth, we were comfortable. So these were 2 additions that we did.
Sirma SGS and Polycab. You're overweight, Sanjay, telecom. So I presume Bharti in that? That's the only play? Or are you looking at Industars or...
So we had both, and I'll disclose this, we had both Bharti and Indus Tower, but Indus Tower we recently just reduced because we thought it was really getting a little murky in the sense of, Vodafone talking about that if government support doesn't come through, they would want to file a liquidation. So it is getting a little tough. I really still hope that it will not go that way, but we were wanting to be cautious and luckily we were way in the money. And so we thought that let's take money off the table and then we will reassess if things get clear on that side. Bharti we still own, we have a neutral weight, we have partly paid up. So effectively we are neutral weight in Bharti. It's not cheap now, but we like it structurally because it's a very clear play on gaining market share. And it's done exceptionally well. So it's a good core holding for us.
I was just going to ask you, because Bharti has run up so much in the last 5 years. It's gone up from 500 rupees to about 1800, 1900. And considering that you focus so much on value, your PE of your fund is much lower than the PE, the average PE of the Nifty 50. So how does it align, Bharti's valuations versus, even though it's offering growth on the valuation front, how do you think about it?
Yeah, so, our strategy is we love growth, but we don't want to overpay for it. So growth at reasonable price is what we are. Today also, I think our valuation and our markets moved up. So it's more like 14.5 times on 27 for growth rate, much higher than Nifty, and ROE is much higher than Nifty. So Bharti, yes, it's worked very, very well for us. We participate through the main and the partly paid up. In fact, partly paid up, I remember, has almost become 3x because the underlying has gone up 2x, and they're not called out for the 402 rupees, which is yet to be paid. So it's worked well. So one is, you're right, in the near term when you see, they don't look cheap. But now Bharti is into a free cash flow territory. Also, there is a clear case of revenue market share gain. And when you look at this company in terms of EV, EBIT to EV or FCF field on the core business, then it is not so overwhelming. It is still going, I think, a bit faster. So when you think from a next 3-year angle, you may not get returns for the next 6 months, 9 months, but it's okay. That's the way we are thinking about Bharti, that if we think from the next 2-3 years, the clear runway for growth and appreciation.
All right. Sanjay, just stay with us. I want to ask you about IndusInd Bank. We're getting some statements that are coming in there from Mr. Ashok Hinduja. He's expressing confidence that, in fact, the bank is on the recovery path. And importantly, the last part of that particular press release that he's put out is that though the capital adequacy of the bank is quite healthy, for business growth, should any further equity be required, the promoter entity remains committed to supporting the bank as it's been doing over the last many, many years. So there is, some kind of confidence in case it's required. Promoter entity saying, we are there. He said it before, but I think, reiterating that, I guess the street is taking heart from a couple of those statements that are flashing for you at the bottom of your screen. Sanjay, what is your view on IndusInd Bank? Diversified financials is what you like. Will it make the list?
Yeah, no, so we got hurt. We own a little bit. We did sell on the rise. So let me admit that it's certainly that we own. So I think there is clearly a mess by the executive management. There is not one mistake. There are a series of mistakes. And of course, whether it's fraud or it's connivance is yet to be proved. But certainly for the fifth largest bank with 4 lakh crore of capital, it's certainly, and as I said, it's not one area. It started with investment book, then it went into microfinance. Then even the classification issues, while it did not have a profit impact. So these are, for the fifth largest bank, it certainly doesn't go well. So to admit first, certainly it's not good. Now, whether it is in the, we've gone through earlier in a lot of banks, whether is it in the price or is it not in the price? I think yesterday's call from the board was quite satisfying in terms of the controls that they have taken from the executive management. While there's a committee which is managing it, and RBI has been very supportive. And we have a 4 lakh crore deposit franchise still not impacted so much. So if you have the right management which will come through, then this franchisee has done a lot of good things as well. The impact on the book value, mind you, after all this is not more than 40-50 rupees. So the book value, this year they made profits, the book value will be around 820 rupees. And next year, conservatively, it could be 880 and then 950. So now, if the ROE trajectory, which is not going to happen to 12% for the next 2 years, but if things on the delta gets better, I think cleanup has happened. Now comes if the right management comes through, if they get the right top management, executive management, and if that gives confidence, then I think things can get better. So that's where that's where we are right now, and I think we'll also watch it as it progresses.
So Sanjay, what are you saying? You got hurt, as you're admitting, but what's the call right now? The time to sell, you believe, is over. Is the time to come in there and chip in again coming, or would you wait and buy only at, say, lower levels?
No, so we on the rise, and we transparent, we did sell, but we are owning 1.3% and we will hold on. I've seen that at times, it's better to pause a bit, wait at times. There could be, it's a very large bank with a market cap, in fact, less than Yes Bank, I suppose. So it's certainly very, very attractive for, if today this were to have an M&A or a merger, it could be lapped up at a significantly higher price. But that's not the way we should think about it. In the near term, it's important that we get a good executive management and they run it efficiently in a better way with better processes. And I think that will instill confidence, but it will be a time-consuming process.
Absolutely. Sanjay, just one last brief question. You have some allocation to very, very small to commodity chemicals. What name is that?
So we have Pondy Chemicals, which is
I see.
It's not chemicals, it's into recycling like Gravita.
Correct. We've spoken about this and it's done very well from the time that you've I think bought the name. Thank you very much, Sanjay. Appreciate you joining us and good luck as always as you run the fund. We'll take a quick commercial break here. We come back in just a bit. And as always, we get you a quick check on what dealing rooms are saying in our segment D Street Chatter. We'll get you some technical trading calls as well. Stay tuned.
Welcome back. Well, keep an eye out on a few stocks actually from the broader markets. Genus Power should come up for you on the screen. Big uptick is what we're seeing on that name. Remember the promoter entity that sold some shares at higher prices. And from there, we saw a sharp correction on the stock price. But today, it's moved up on rather large volumes. So big move out there. Hind Rectifier as well. That had come out with a decent set of numbers. I don't think they have any institutional holding. But this one, in fact, I think in the last 10 days or so, the stock is up close to around 15%, 10% of that coming in today's trading session. So actually, in the last 14 days, it's up more than 20%. Big move on this stock as well. But it's that time of the day when Nimesh joins in to help us out with what he's picking up on D-Street Chatter. Nimesh, what do you expect today in terms of flows? The Nifty is still down, but some recovery.
Well, Nigel, from a flow perspective, you're going to see a down day. I understand there is a large basket selling at a leading FI day. So the FI number could be relatively large in today's market. But we've seen a bit of a recovery as well in the last 30 minutes of trade. But largely, it's a day of risk off. You've seen globally as well, a lot of equities are under pressure on the back of rising bond yields. So that's going to be a bit of a concern in the very short term. Sector where there is a bit of buying interest continues to be the PSU basket. And within PSUs, I understand for the last couple of days, there is buying interest in the PSU bank stocks from larger institutions. So that from a flow perspective. Even the broader markets, the breadth has turned slightly negative in the last couple of hours of trade. A small recovery there. But again, at least in the broader market, there are equal gainers as well. So a mixed day from a mid-cap, the broader market point of view. But there is pressure in the Nifty names, largely on the back of FI selling.
Right. Nimesh, thanks for that. In terms of specific stocks, what's coming up on your list?
Well, Prashant, I'll start with blocks. That's something which I track very closely. So the first stock is TD Power. There was a large block in the opening trade today. The stock has recovered from the intraday lows, but from a block perspective, the promoter entity was a likely seller. And I understand some domestic mutual funds were buying into this block. So the disclosures at the end would be quite interesting. So that's the first name. Second, a couple of stocks where there is a small MOC buying in the last 30 minutes at an FI days, which is Cipla and Shriram Finance. In both the stocks, there is MOC buying at a leading FI days, so that stands out for me. Third, a bit of buying back in metal names. So both SAIL and Tata Steel stands out in terms of buying interest from larger institutions. So there is delivery-based buying in metal stocks today, especially the steel names. And the last one is Zydus Life. Post earnings, we've seen a bit of a recovery in that name as well, largely on the back of commentary. The stock was falling. But while the stock is recovered in the last 2 days, today in the last 30 minutes, you're going to see a small MOC selling. So I might see a bit of a reaction there, but at least for today, there is last 30 minutes selling in Zydus Life.
Okay, all right, Nimesh, thanks a lot for that. By the way, keep an eye out on IndusInd Bank. The stock has now moved to the high point of the day. I think that vote of constant coming in from the Hindujas and the commentary that came up, that's what's helped the stock move closer to the high point of the day. It's perked up a little bit post those lines that were flashing for you on the screen. But Nagaraj Sethi from HDFC Securities is back with us. Nagaraj, we want some trading ideas. What do you have on your radar?
Yeah, apart from that, two stocks discussed a while ago, and I have a couple of stocks which are showing some promising trend. First one is from a shipping side. Shipping Corporation of India, what we can observe is a sharp upside momentum in today's session after a reasonable downward correction. Currently placed at the hurdle of 200-day EMA. I'm expecting this hurdle to be taken out in the near term. So that is looking attractive. The overhead resistance to be watched is around 210 to 215 in the near term. Second one is the NMDC. If you look at chartically, NMDC was moving in a consolidation. Chartically looks like a flat breakout on the upper side, placed at the hurdle around 70, 50, 71, making an attempt of upside breakout. Once it breaks out from the 71, 50 level, the next resistance, overhead resistance would be around 75.50 to 76 levels in the near term.
Okay, got it. All right. Thanks a lot for that, Nagraj. Well, let's focus on a couple of other big moving stocks. Ekta joins us to tell us first up about Fortis, and then I think we get a quick analysis on Strides. Ekta?
Thanks for that. Well, yes, Fortis was in focus, on the back of its numbers a couple of days ago. It had its call yesterday. So in terms of the call, they have indicated that they're looking to add around 1,976 beds over FY26 to 29. They are estimating around a 14 to 15% growth in the hospital business revenue and 150 to 200 basis points margin expansion, with the growth driven primarily by RPOPs by around 5 to 6%. That's average revenue per occupied bed. Diagnostics, the guidance is FY26 double-digit revenue growth, margins of mid-20s,
EBITDA margin on a net revenue basis in FY26 for diagnostics could reach 23% and maybe 25% in a couple of years. Nomura maintains its buy target price 700 rupees. According to them, the company guidance implies FY26 hospital segment EBITDA margins at 22 to 22.5%, better than consensus of around 21.9%. Nuvama retains a buy and a target price of 770 rupees. According to them, they are among the select few players on margin ascent trajectory in the next few years.
Okay, Ekta, we can't let you go at that though. Tell us about Strides. The numbers came out, the stock has taken off, striding away.
Well, yes, absolutely, taking big strides, this one. Now, the main thing about Strides is that they've met their FY25 guidance and the overall numbers look good. So, revenue was up 14%, EBITDA was up 17% year-on-year, margins 18.3%, profit also was around 82 odd crores. Now, FY25 guidance, they indicated 12 to 15% growth. They've come in at around 12.7% growth. EBITDA has come in at 800 crores. The guidance was 750 to 800 crores. Debt to EBITDA is less than 2 times. It's at 1.9 times. US revenue has recorded $291 million, higher end of the guidance of $275 to $290 million. Overall, they have also indicated that going forward, they are reiterating the US business revenue outlook of $400 million for FY27 to 28, and they plan to launch around 60 products, which are these dormant ANDAs that they have. They will be relaunching it over a period of time. They've already launched 3 in FY25. So overall, guidance seems to be, they've met their guidance for FY25 and they seem to be quite bullish on the US business going forward as well.
All right. Thanks very much, Ekta, for that. So those are Strides coming off a little bit from the high point. Fortis is the other one, which we highlighted. Now, let's also shine the spotlight on a bunch of other names which are making moves, large moves. Vinny's got that list. She's standing by. Vinny, afternoon.
Hi, afternoon. So keeping an eye out on a few other companies. Interarch is the other one which reported a very strong set of numbers in Q4 FY25. And management commentary, that seems to be good as well. When they spoke to CNBC-TV18 today earlier in the day, they spoke about expecting a top-line growth of around 17.5 to 18% growth in FY26. Margins expected at around 9.8%. Order pipeline for FY26 also seems healthy. They met the track record of what they have in terms of order books, and that is what is keeping the stock abuzz today. Let's talk about Garden Reach. That's run up in trade today as well. They've emerged as an L1 bidder for construction of NGCs for Indian Navy. Now, this L1 bid they'll be making around 5 out of the 8 NGCs that are supposed to be made. So the value of that is expected to be somewhere around 25,000 crores. Now, why is it interesting? Because 22,680 crores is their current order book as on March 2025. So this order value is already much more than what we're seeing in terms of the order book of the company. Emcure is another stock. They reported their numbers a short while ago. Good set of numbers that's come in from the company. Overall revenue growth of around 19.5%. Profits up around 65%. Growth this time is led by the domestic business, which saw 25% growth approximately, led by cardio, dermatology, OTC segment of the business. And on the flip side, we have Indoco Remedies, weak performance coming from the company. They've reported a net loss versus a profit last year, as well as revenues are also down by 13%, so keeping the stock under pressure.
Okay, all right, Vinny, thanks a lot for joining in and giving us that entire list of stocks that are buzzing around. Mayuresh Joshi of William O'Neill joins us on the show. Hi, Mayuresh. You heard of quite a few stocks that are moving around. You know, you have Strides, Emcure, Pharma, both of them reacting to a good set of numbers. In fact, you know, the list of stocks that have moved up in the last few minutes is quite a large one. I can see Garden Reach as well building on gains. You have Carousel that has moved up. Anything that comes to mind from the broader markets? Because that's clearly the one that's outperforming today.
Afternoon, Nigel. First of all, I simply love your tie.
Sending it across to you, Mayuresh, whenever you require it.
Secondly, I think out of all the group, all the numbers which were just discussed, I think within the healthcare space, I think Fortis and Strides Pharma both come to our notice. And Strides is something that we have continued holding in our global portfolios. I think the guidance that they've probably given, specifically in the case of Strides, $400 million from approximately $290 million that they achieved in FY25, is a significant jump as we see it. Obviously, I think the expectations in terms of their margin delivery expected to be between 17.5%, 18.5%. And therefore, if you probably look at both the US market and the regulated markets, the expectation of very strong growth and tailwinds might probably continue. Growth in the access markets, the numbers might be a little lumpy, is what the management suggests. Even in last call, I've not heard the call so far. I think the call will happen in some time. And therefore, I think that part of the business might still be a little lumpy. However, I think the overall numbers might still be very, very constructive. They've got almost 15-20 ANDs which are awaiting approval. And therefore, I think it should be a very, very strong balance sheet show for Strides. Again, I think with the hospital space, hospitals as a space, Nigel, is something that we've continued liking at O'Neill. We continue holding hospitals like Apollo Hospitals, Krishna Institute of Medical Sciences in our global portfolios. But Fortis also had a very, very strong numbers delivery. If you probably look at the core hospital business, the margin in excess of 20%, 20.4, 20.5% for FY25. The diagnostic business for one-offs, their margins are at 24, 25 odd percent. The RPOPs that they have probably reported for FY25 on an annualized basis, close to the 2.5 crore mark. And obviously the debt numbers have gone up because they've done the Ageless acquisition, which is apparently doing well. So in our own sense, I think hospitals as a space should continue doing well. Fortis, fabulous set of numbers, but something like an Apollo and KIMS is something we continue holding in our global portfolios.
I absolutely, completely agree that with that view, Fortis, I mean, what a run it's had overall. Even as everyone kept waiting for that IHH open offer for years, right? But the stock has not waited. It's just continued to reflect the improvement in financial operational performance. So it's done phenomenally well. More stock talk in a bit, but ITC will report numbers as well. Fourth quarter in focus, numbers should be today, later. Mangalam is here with a quick preview in terms of what the street is expecting. Mangalam, over to you.
And a couple of things, when you look at the numbers, just look at the estimates of the street and not look at the base numbers, because the base numbers would be restated on account of the demerger of the hotel business. So the estimates that the analysts have made have taken off the hotel business, and as a result of which they are expecting a little over 16,800 crores in terms of a top line for ITC this time around. The EBITDA would be close to 3,600 crores. And the net profit as well will be in focus for ITC. Again, the EBITDA would be 6,100 crores and the net profit would be closer to 3,600 crores. The important part to watch out for ITC this time around would be the cigarette volume growth, a number that the company does not disclose. The street is working with a number anywhere between 4 to 5% on cigarette volumes. And what we're expecting is that the cigarette revenue would grow anywhere between 6 to 8%. The important thing to watch out for in the FMCG vertical is how much is the margin compressing by, because we've seen a sharp inflation in palm oil prices. So on a 6 to 8% revenue growth, there could be about 200 to 300 basis points margin contraction. The third part of the business, the agri part, because of increase in tobacco prices and also liberalization of some of the export opportunities, that business is likely to grow at a higher clip, around 20 to 25%, whereas cyclical weakness in the paper business would imply paper revenues which will grow just about 3 to 5%. All in all, ITC numbers likely to be steady. The stock is reflecting that.
Mangalam, thank you very much for that. ITC Hotels, by the way, the demerged hotel company, that is doing very well right now while we wait for the ITC numbers themselves. I think last I checked was up about 7%. Okay, 5 now, so 215 on ITC hotels at this point in time. We, of course, have been speaking with a whole host of companies which have reported numbers. Gokuldas was one. So we had the management with us. Let's just quickly play out a couple of sound bites here.
Long term, 100% it's on track. Short term, there will be some aberrations. When I say Q1 and Q2, there could be some order flow hiccups, primarily because customers themselves are unaware as to how the tariff is going to impact them, and hence how do they go and build up their inventory. Orders have not been paused. Orders are coming through, but the brands are just concerned about the order flow. So they may trickle it down. I don't see an order flow problem, but I see some volatility again because of unknown tariff.
Okay, some volatility in in their space. That's for Gokul Das. But Indigo reported a good performance in Q4 with festivals, weddings, Markham taking their profit to around 3,000 crores. Earlier, we spoke to the CEO, Mr. Elbers, as he discussed the company's FY26 capacity and how he sees things pan out for the next year. Let's hear him out.
For FY25, we've given a capacity guidance in the early double-digit growth. That's the capacity guidance we have. Obviously, with an 87% load factor as we had in last year, that capacity guidance should not be too far off from the traffic guidance we're giving to the market. So again, early double-digit is the capacity guidance we've given for FY26 going forward. So the overall impact of that is relatively limited. And clearly what we have done is we reallocated some of our flights to the southern part of India and basically are growing from there. Post the ceasefire, the flights have been reinstated and all the 170 cancellations have been reinstated by the end of last week. And we're sort of back to a regular operation. That clearly has an impact on May, but again, it's more in the single-digit range when it comes to capacity impact. We have seen a drop in bookings, as we just shared also in the call, but that seems to have bottomed out. And actually, we see now the first signs of people picking up bookings again, and the resilience of the market is actually quite strong. If I see where we are now, we ended up the last quarter with the AOG number in the 50s. The quarter prior to that, we've ended up in the 60s, and today we're somewhere in the 40s. So, we've moved down from 60s to 50s to 40s today. So clearly, we see a steady improvement of that situation. And when we said we have turned the corner, it clearly is, and I guess that trend we expect to continue going forward. So that means by the time we turn the corner 1 year back, we probably should be around half of that by the time 1 year is passed.
Well, time to slip into a snappy break. As we do that, here's some good news for our viewers. India's business news leaders now just a click away. Introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles, and financial world updates. All of this at your fingertips. Download the CNBC-TV18 app from the Apple Store or the Google Play Store, or you can just scan the QR code that's up for you on the screen. Welcome back. Keep an eye out on a few stocks. Garden Reach continues to build on to gains. So good up move is what we're seeing out there. And Reliance Infra, I think it comes out with its set of numbers. The street's quite optimistic on prospects because, they've turned around. They've got credit upgrades out there. And the debt number has come down substantially as well. So I think it'll be an interesting set of numbers. Explains why the stock is up close to around 2.5% or nearly around 3% as we speak. Mayuresh, you have been quite positive, I think, on some of these alcohol beverage companies. As of now, which one's on your radar? You had Tilak Nagar, you had Allied Blenders. Both of them came out with good set of numbers. I think Radico as well, came out with set of numbers on the day of the India-UK FTA. Right. But what do you like?
So we continue liking Radico, Nigel. I think the numbers, as you said, were fabulous in our opinion. Again, I think the entire premiumization story for these alcohol beverages are actually continuing on a very, very strong footing. And therefore, in terms of the contribution of premium products, is going to increase substantially in the next few quarters from a volume perspective. Obviously, from a value perspective, as volume increases, the value growth will also be very, very obvious. And even within the premium segment, the super premium segment, the management is of the belief that they should cross 500 crores in terms of turnover as we speak. The margin performance has been relatively better as well. And therefore, expectations of margins remaining between that 14.5% band is quite a possibility because input costs, both ENA, molasses, glass prices are subdued as we speak and are expected to continue remaining on the lower side, which gives that added impetus in terms of both price hikes from respective states, the premiumization as well as lower input costs, creating huge operating leverage onto the balance sheet. So as far as ratings, rankings, institutional holding is concerned, as we see it in Cancelim, I think this fulfills most of the criteria. And therefore, this is one stock that we continue liking from the alcohol beverage space.
Radico is the pick as far as the alcohol bev space is concerned. And again, I mean, something which is done very, very well. We've spoken about this in the past, BSE and Mayuresh, any thoughts on it's correcting a little bit, but it's the best performing stock in the NSE 500 last 1 year. So can give back a little bit, no problem. But what's your sense here?
Absolutely. I think I remember, Prashant, you guys did a very good piece on BSE and NSE, both from a business perspective, valuation perspective as well. And therefore, I think the things that are working in favor of BSE in terms of the expiry, which is now restricted to one exchange per week, respectively, as well as expectations in terms of the core big picture argument, which stays with the exchange platforms. With the assumptions of more demat accounts being added on, expectations of more clients probably coming and trading through various intermediaries as far as stock exchange platforms are concerned, as well as its annuity business as well. And therefore, I think it is sweetly placed. However, I think the moves that have probably now happened in BSE in terms of price action, it's actually doubled, as your chart is indicating, in a matter of a year itself. And therefore, I think my own sense is investors should probably be a little bit cautious if you're entering aggressively into this stock. I think pullbacks onto this stock will be a better strategy or an optionality if that exists.
Okay, all right, Mayuresh, request you to stay with us, but let's wind down the market for today's trading session. We end with a cut of around 170 points. Well, I'll tell you what, we recovered more than 150 points in the last 60 minutes. Remember, today is the Nifty weekly expiry, so that could have been an element at play. What did well in today's trading session? Well, from the Nifty pack itself, the outlier was IndusInd Bank. It appeared it was a kitchen sinking quarter, and the street is appearing to look ahead. The management commentary as well has been positive, with the Hinduja saying they're ready to back up the bank. So that gave some confidence. Stock ended up close to 2%. Bajaj Auto as well was up close to around 1%. ONGC, you have some pressure on crude oil prices, so that one corrected in line. Mahindra & Mahindra has been the rank outperformer. That came in for some profit taking. And Hindalco as well, a bit of a risk off is what we're seeing. So that's why that stock was lower in trade. Add to the list trend. But from the broader markets, plenty of winners. And let's talk about only 20% gainers in today's trading session. Cosmo first, 20% up. You had Jai Bharat, that one was up another 20%. Ramco Systems up another 20% in trade today. And a few other notable winners on very, very large volumes. Interact, stock up more than 10%. Elecon Castroy, that one was up more than 10%. You had Carousel India as well, up close to 10%. And Garden Reach, the street likes the big order that they have won. So that goes home with a gain of close to around 10%. Hind Rectify is another name that went home with solid gains of close to around 10% or thereabouts. So It was a day that the Nifty goes home with some cuts. The Nifty Bank took support at around that 54,500 odd mark, which is a crucial mark we had highlighted earlier today. And it bounced back close to 400 points